Hello and welcome to Rockstar Manager. I'm Dr. K, the management professor. And before we get started, please subscribe to my channel by hitting the subscribe button down below and also hit the notifications button so you'll see each time I post a new video. While you're doing that, full disclosure, I am not a financial advisor, but I do teach graduate and undergraduate finance courses. In this episode, we'll walk through various accounting calculations. Now let's get started. Here, we're going to walk through a 4-month cash budget spanning February through April. All figures are represented in thousands. For example, gross sales for February are 1.2 million. You should also notice the different colored font. All figures that you see in blue are the summary totals of individual receipts and invoices for each month. Each of those are individual entries on this sheet, rather than calculations. All black and red font figures are the result of calculations from various cells in Excel. This top section represents all money coming into the organization. This last line in the top section represents the total cash coming into the organization by month. Here, you can see that the $1.2 million in black font is the total of cash sales plus the prior 1 month and 2 months of incoming cash. So that calculation is $300,000 plus $600,000 plus $300,000. This next section details what is paid out of the organization, known as purchases or expenses. This section can include any cash purchases, wages, salaries, mortgages, rent, insurances, marketing and promotional expenses, as well as tax paid out and other items. Here, the total of what was paid out of the organization in February total $1,905,000. This next line is another calculation of inflows, money coming in, minus outflows, money paid out. You want this number to be positive so that you aren't spending more than the money that you're earning for a given month. In this case, the $1.2 million minus $1.9 million is a shortfall of $700,000, which is why it's red. In February, there were more expenses paid out than money that came into the organization. That same number is carried below to the net cash flow line. The ending cash balance is your beginning cash balance plus your net cash flow. In February, the ending cash balance is your beginning cash balance of $250,000 plus the shortfall of $700,000, which equals a shortfall of $455,000. The next calculation is your surplus, which is your ending target cash balance plus your target cash balance. In this case, because there are no prior months to account for, the cumulative surplus, or in this case deficit, is a $605,000 loss in February. So if we look at March, we can conclude that the new total revenue is $1.7 million, adding the $800,000 plus $600,000 plus $300,000 together. We can also see that the $300,000 was paid out in taxes in March. All the same calculations carry through, but now our cumulative total is a deficit of $2,507,500. This calculation takes the $1.9 million loss in March from the line above and adds the cumulative total loss from February of $605,000. Therefore, you can see by adding the April cumulative total of $2,957,500 plus the May surplus of $2,300,000 $47,500, you get a 4-month cumulative total of a $610,000 deficit. Let's consider your personal cash budget. Some things to remember regarding your cash inflows. You have multiple sources of cash to consider. Obviously, any income you receive from your job or any side hustle would be considered a cash inflow, as well as any gifts, scholarships, refunds you might get from your taxes or other refunds, and any dividends or interest paid from investments that you hold. All of these sources are cash inflows. Some things to think about regarding your cash outflows. Consider everything when it comes to household expenses: mortgage or rent, insurance, utilities, maintenance, home furnishings, your mobile phone, cable or streaming services, groceries, and any other household supplies. If you're a student, consider tuition, fees, textbooks, and any other supplies for your courses or internships. If you're a working professional, think about meals and professional attire at a minimum. What type of transportation do you need for your job or family? Think about car payments, maintenance, gas money, insurance, or if you need to ride a train or a bus. Are there other types of insurance that you would consider, like health or life insurance? Think about your tax position, your savings and investments. Think about your social life, grabbing a bite with friends, going to the movies, a concert, or some other fun event. Do you want to travel? Do you want to be a giving person and donate to charities? All of these should be considered when reviewing your personal cash outflows. Lastly, consider your cash balance. This amount is really the amount that you keep in your checking account readily available for payments, and any excess should be invested in a Roth IRA or other investment. Hopefully you have a better understanding of various accounting calculations. If you're interested in learning more about related managerial topics, you can find my books, Rockstar Manager from Theory to Practice, Mindset, a research-based approach to understanding motivation, or my latest book, Be Your Best You, the ultimate research-based guide to outstanding leadership. They can be purchased on Amazon and at most major retailers. Thank you for your time. Be your best you and be a rockstar manager.